Every single day in Australia, someone buys their first home and makes a mistake so devastating that it haunts them for the next 30 years. 30 years. That's how long most mortgages last. That is not a typo. That is a prison sentence if you get it wrong. And the terrifying part is that most first home buyers don't even realize they've made a catastrophic error until it's far too late to fix it. They're already locked in. The papers are signed. The mortgage is ticking. And the slow, grinding reality of their mistake starts eating away at their finances, their mental health, and their future like acid dripping on concrete. I've watched it happen hundreds of times. Good people, smart people, hard-working people who saved for years, sacrificed holidays, skipped dinners out, did everything they were told to do, and still ended up financially wrecked because nobody warned them about the traps waiting inside Australia's property market. Today, I'm going to warn you. Consider this video the conversation your parents should have had with you, your bank definitely won't have with you, and your real estate agent is praying you never hear. These are the 5 biggest mistakes first home buyers make in Australia, and if you're planning to buy in the next 12 months, this could save you $100,000 or more. That is not an exaggeration. Sit down, pay attention, let's go. Mistake number 1. Buying at the absolute maximum of your borrowing capacity. This is the most common and the most destructive mistake first home buyers make, and the banks are actively encouraging you to do it. When you walk into a bank or a mortgage broker's office, they run your numbers and hand you a figure. Let's say they tell you that you're approved to borrow $750,000. Most first home buyers hear that number and immediately start searching for properties at $750,000. They treat the maximum borrowing limit as a target instead of treating it as a ceiling they should never touch. Here's what the bank isn't telling you: that approval is based on your life going perfectly. No job loss, no illness, no interest rate increases, no unexpected pregnancy, no car breaking down, no emergency of any kind for the next 30 years. How realistic does that sound? It sounds insane because it is insane. In 2022, thousands of Australian first home buyers borrowed at their absolute maximum when interest rates were at historic lows around 2%. 2 years later, rates had more than tripled. Their repayments jumped by 42-60% overnight. Families who were comfortably managing their mortgage at $2,000 a month suddenly found themselves paying $3,200. That extra $1,200 a month didn't come from nowhere. It came from grocery budgets, from savings accounts, from children's activities, from every single discretionary dollar they had. Some of them lost the house entirely. The rule is simple. Never borrow more than 70% of your approved maximum. If the bank says $750, search at $525. Leave yourself a buffer that can absorb shocks because the shocks are coming. They always come. Mistake number 2. Skipping a proper building and pest inspection to save money. This one makes me physically angry because it is so easily avoidable and so catastrophically expensive when it goes wrong. A building and pest inspection in Australia costs between $400 and $700. That's it, less than a weekend trip to the coast. And yet, in competitive markets like Sydney and Melbourne, first home buyers routinely waive inspections because they're terrified of losing the property to another buyer. They think they're being strategic, they're being reckless. I have seen first home buyers purchase properties with hidden structural cracks that cost $80,000 to repair. I have seen termite damage so severe that entire walls had to be rebuilt from scratch. I have seen plumbing issues, roofing failures, asbestos contamination, and illegal building work that councils demanded be demolished at the owner's expense. All of it would have been caught by a $500 inspection. Every single time, the buyer says the same thing afterward. I didn't want to lose the house, but what did they actually get? They got a house that was already broken before they moved in, and now they're paying a mortgage on a property that needs tens of thousands of dollars in repairs they can't afford. Never skip the inspection. If the vendor or agent pressures you to waive it, that should be the biggest red flag you've ever seen. They want you to skip it because they know what you'll find. Walk away. There will be another house. There will not be another $80,000. Mistake number 3. Ignoring the true total cost of ownership and only focusing on the purchase price. First home buyers are obsessed with the purchase price. Can I afford a $600,000 house? Can I stretch to $650,000? But the purchase price is only one piece of a much larger financial puzzle, and if you don't understand the full picture before you sign, you are walking into a financial ambush. Let me break down what a $600,000 property actually costs you in the first year alone. Stamp duty in most Australian states will be between $15,000 and $25,000 depending on whether you qualify for concessions. Conveyancing fees run between $1,000 and $3,000. Building and pest inspection is another $500 to $700. Mortgage establishment fees can be another $500 to $1,000. Lender's mortgage insurance, which kicks in if your deposit is below 20%, can cost anywhere from $8,000 to $35,000 depending on your loan size. Then once you own the property, you're paying council rates, water rates, strata levies if it's an apartment, landlord insurance or home insurance, maintenance and repairs, and potentially body corporate special levies that can land in your lap with zero warning for amounts exceeding $10,000. I've seen first home buyers who budgeted perfectly for the purchase price and then went into credit card debt within 6 months because they had nothing left for the actual costs of owning the property. Budget for the purchase price plus an absolute minimum of $30,000 to $40,000 in additional costs in year one. If you don't have that buffer, you're not ready to buy, and there is no shame in waiting until you are. Mistake number 4. Buying with emotion instead of buying with data. This is the mistake that real estate agents spray you'll make. They are trained to trigger your emotions. They use words like dream home, forever home, once in a lifetime opportunity. They host open inspections with fresh flowers on the counter and coffee brewing in the kitchen because they know the smell of coffee makes people feel comfortable and safe. They create urgency by telling you there are multiple offers, other buyers are interested, the vendor wants a decision by tonight. All of it is designed to make you feel instead of think. And when you feel instead of think, you overpay. CoreLogic data shows that in competitive markets, emotionally driven buyers pay an average of 7 to 12% above a property's fair market value. On a $600,000 home, that's $42,000 to $72,000 of overpayment. Money you will never get back, money that is baked into your mortgage for 30 years. Accruing interest, compounding against you every single month. Before you attend a single open inspection, you need to do your homework. Study comparable sales in the area for the last 6 months. Understand the median price for that property type in that suburb. Know the average days on market. If a property has been listed for 60 days and the agent is telling you there's urgency, they are lying. The data is free. CoreLogic domain, realestate.com.au. All of them provide suburb profiles and sales histories. Use them. Walk into every negotiation with numbers, not feelings. The agent is not your friend. The agent works for the seller. Their job is to extract the maximum price from you. Your job is to not let them. Mistake number 5. Not understanding what happens when interest rates change. This is the mistake that has destroyed more Australian first home buyers in the last 3 years than any other single factor. When you take out a mortgage, you are not locking in a fixed cost for 30 years. Even if you fix your rate, that fix typically lasts between 1 and 5 years, and then you roll on to the variable rate, whatever it happens to be at that time. Most first home buyers in 2021 fixed their rates at under 2%. They budgeted their entire lifestyle around those repayments. Then the Reserve Bank raised rates 13 times in 18 months. Those fixed terms expired, and buyers were thrown on to variable rates above 6%. The repayment shock was so severe that mortgage stress across Australia hit levels not seen since the 2008 global financial crisis. PropTrack data shows that nearly 40% of recent first home buyers are now classified as being in mortgage stress, spending more than 30% of their gross income on repayments. Some are spending 50% before you buy. Stress test your repayments at a rate at least 2% higher than your current rate. If your rate is 6%, ask yourself honestly whether you can afford the repayments at 8%. If the answer is no, you cannot afford this property at any rate, because rates move. They always move. The ARBA does not care about your budget. They care about inflation. And if inflation demands higher rates is what you'll get, regardless of what it does to your mortgage. Here is the truth that ties all 5 of these mistakes together. The Australian property market is not designed to protect first home buyers. It is designed to extract maximum value from them. The banks profit from lending you more than you can handle. The agents profit from making you pay more than a property is worth. The government profits from stamp duty regardless of whether you can actually afford the home. Nobody in this system is looking out for you. Nobody. You have to look out for yourself. And that starts with educating yourself before you spend a single dollar. If you are a first home buyer watching this right now, let me leave you with something that could change everything. Slow down. The market will not disappear while you take an extra 3 months to do your research. The right property will come along if you are patient and prepared. The wrong property will come along much faster because desperation is a magnet for bad deals. Be the buyer who walks into every negotiation armed with data, buffered with savings, and completely willing to walk away. That willingness to walk away is the most powerful weapon you will ever have in a property negotiation, and most first home buyers never use it because they've already fallen in love before they've run the numbers. If this video saved you from even one of these mistakes, it was worth your time. Hit that subscribe button right now. Turn on notifications. Share this with every first home buyer you know, because I guarantee you at least one person in your life is about to make one of these mistakes and they have no idea. Drop a comment below and tell me which mistake surprised you the most. And if you want to see which suburbs in Australia are actually worth buying in right now, watch the video on screen. I'll see you there.